Mr. Mark Selby, how are you, sir?
Mr. Matthew Gordon, doing very, very well.
Glad to hear it. It was good to see you in Quebec City last week. What an event. Big turnout. Do you get much from it?
Yeah, no, it was good. With these conferences, you end up with 20, 25 meetings, but, the key there is if you have 6 good ones, then, to me, it's worth it. And we did get 6 good ones out of it. So, this is the second time they ran this event, and it was a big step up from, the first version. So, again, I hope it ends up as a regular on the calendar going forward, because I thought they did a pretty good job. So
yeah, for sure. And I'd say the other thing I took away from that was the battery boys were the stars of the show. The torchlight was firmly on them, and the gold guys were sort of moping in the corner. Battery metals are king. Wow, good news.
Getting their day in the sun. Getting there.
Getting the day in the sun. But put that in context. Getting the day in the sun from industry, getting the day in the sun from governments, federal, provincial, state, etc. Getting a day in the sun when it comes to funders looking in and trying to understand who's real and who's not. And I guess that was the thing I enjoyed most, was seeing a lot of companies who could talk the game of how they're actually going to get into production, because it's the metal we need.
Yes.
Not the conversation around, not the promote, not the pushing of equities. That give me the metal. That's the big problem that needs to be solved. And it's nice to see a few companies who could, hopefully get over the line on that front. But look, anyway, enough of my ramblings and thoughts of last week. It was a good session. I'm definitely good to see you. Let's talk about the world of nickel. What's happening out there, nickel price?
So my long-awaited waiting for Godot moment in terms of the test of the $9 pound, $20,000 ton level has finally arrived about 3 months later than I thought it was going to. So it's bouncing off $9 a pound, $20,000 a ton right now. So we'll see how that goes. I expect it to break down. There's enough noise from China in terms of slowdown there. People nervous about, are we going to see, some more rate hikes because inflation looks a little stickier. So, I think that gives the bears a shot at, pushing the price down. But again, I expect any kind of breakdown to be short, looking sort of 2 to 3 months below that level. And before, by the time we get to the end of the year, the rebound and restocking in the battery sector, which is, again, continues well underway, we'll take prices back up over 20 and, back towards the $24,000, $25,000 a ton level.
It's interesting. And are you starting, well, I know this from the COP side, but are you starting to see all battery metals starting to behave the same way? Or because I know lithium price has been beaten up good for, the last, I guess, 8-9 months. Come back a little bit last month, but my goodness, the equity side has gone flying out of the gate on news of, demand news. How's everything else behaving?
Yeah, no, that's as we talked about, just because one commodity goes down, basically it pulls all of the battery related commodities down with it. So this rebound that we're seeing in lithium really is leading to a restocking in demand across the various metals. So, it'll be interesting to see how, things play out through the remainder of the year. But again, I think you'll continue to see all those metals as the battery supply chain restocks after a pretty severe just destock in the first half. We'll surprise people. And again, lithium prices came off, almost 75% from their highs, but they're still more than double where they were, a couple of years ago. So I think, for lithium equity investors, the fact that you're seeing prices, come back up into the $30,000 ton range, the read-through on valuations, if that is really going to be a, 25,000, more of a longer term floor, then I think that's pretty exciting for, a bunch of the lithium equities out there.
And if I, obviously we saw recently a little slug of Russian nickel showing up in the market. What effect does that have?
Yeah, so inventories of nickel metal in various forms were ridiculously tight in China. They were literally down to a few thousand tons. So it was, so premiums had gotten quite wide, quite big in China. And so again, markets fix those kind of imbalances. And so, a big slug of Russian nickel arrived a few weeks ago. with the desired, impact, you've seen premiums compress. What that's done, again, the big topic, for us this year is really around convergence. So, as we are able to move back from, the NPI and intermediate pricing clearing the market to go back up to where the LME price or the index prices are clearing the market again is well underway. So we saw another decrease in the sulfate discount by about 25% this week as nickel prices came down, premiums came down, and sulfate prices edged up a little bit. It'll be interesting to see, if nickel prices hang in at this $20,000 a ton level. That's another step down in the nickel price. So it'll be interesting to see, how sulfate prices respond next week and see if we, see, a further convergence there. So good to see that's well underway. Again, it's going to take another 6 to 12 months before we're through it all, but it looks well on its way. Stainless, again, with all the sort of macroeconomic noise, stainless is still kind of a little bit soggy. But again, not seeing, discounts widen slightly, but nothing of any great note.
Okay, and so right, we said we'd talk about a little bit of company news last week. So let's do it. We've got a handful of companies we want to talk about. So who are you starting with?
Yeah, so the good piece is again, for a lot of retail investors, people get pretty focused on just drilling and resource statements. But when you're building a real project, there's a bunch of things you have to do to advance your project. So it was good to see some of the names that we've been following over the past couple of years. So Talon basically applied, put their official permit application in place for the mine in Minnesota. So, good to see and a big step forward for those guys. It's interesting, this is not your typical mine design, but I think it's clever on their part. There's a rail line very close by the property. That rail line goes to a state called North Dakota. North Dakota is a far more resource-friendly state than Minnesota. Minnesota, there are a couple companies that have been waiting 15 years to get their permits. So, they quite smartly said, okay, let's put the mill and the tailings in North Dakota, and we'll just ship all the ore by rail to, out to that location. Obviously you can only do that with a higher grade deposit, which is what they have. So, good to see them on that front. I mean, the mine itself, they've condensed down to a very small footprint. So, hopefully they can, and do it as an underground mine. So there's not much of a surface footprint. So hopefully they can, that allows them to get that moving pretty well.
Not my backyard. Lives long and strong. Well done, Minnesota. Arava also, we talked about them, I think, last time out.
Yeah, so they are again new targets in Tanzania near Kabanga. Now they've been drilling around some historic results, and so the key here is if they're able to then step out from some of the historic. Not sure they reported some more drill results. Not sure they've made that step out yet. I got to check it, but again, Kabanga is a world-class deposit. A pretty tough location. But generally where you find world-class deposits near some other world-class deposits. So, hopefully we'll see that one going. And then coming back to the project advancers, you've got Centaurus. They bought back the offtake rights. So when they acquired the asset, to my mind, it was one of the best deals of the last 10 years. So Centaurus had a iron ore, copper, gold deposit that they were advancing in Brazil. About 3 years ago, before people really got excited about nickel, they decided to swap assets with Vale. So they gave them this iron ore copper asset, and they took out this nickel discovery that had been made by Vale about 12 years ago and had a resource there. And so they've done a good job advancing it further. But as part of that deal, they gave up the offtake rights to it. And again, as we've talked on the show, this is a great period where you have the battery makers, the car makers, who are desperate for offtake and are, willing to write checks for that offtake. So they gave up a royalty to Vale on the property to get them back. But again, I thought it was a pretty good deal, and for them opens up the potential for hundreds of millions of dollars of financing from the battery supply chain, which will obviously make it easier to get that project going. And then the last big project that continues to advance. FPX is targeting a pre-feas in the fall. And so they released their metallurgy results. There was a net increase of 4%, which is great. They're historic magnetic only. That the recovery for that dropped by 2%, but they've tacked on a tailings leach circuit that grabs another 6 percentage points of recovery. So they're getting 88% of their what they call Davis tube recoverable nickel, because again, the mineral they have is a warite, which is magnetic. But in terms of their overall nickel grade's 0.21, and they're getting about 55% of that overall nickel grade. So good to see those results, and they should come out with a decent pre-feas this fall.
Fantastic, nice little updates. You've had a little bit of news re Texmod, haven't you?
Yeah. So again, Texmod is our basically low capex, short path into small scale production, targeting 2025. We were very encouraged by the mineralogy, first metallurgy work we did. This mine operated very briefly in the early 70s, sort of at 1.5% to 2% nickel. We believe there's a lot more nickel there, at lower grades of 1%, between 0.6 and 1%. And so, the great thing is we got recoveries between 79 and 84% from 0.6% all the way up to 1.5%. So, very, very happy to have those kinds of recovery levels coming there, and again making it into a pretty high grade concentrate. North of from 18% to as much as 20% plus. So, this is just the your first stage work, so there's a lot more to do there. But very, very encouraged by the results there, and again, just is clear signpost that we're on the track to do something there. Again, given the great results we've had with Texmod so far, Texmod's sitting in a whole series of structures that extend about 20 kilometers. So we did our deal guy did 10 deals to consolidate the land, that whole trend for the first time ever. And so, we've put together an exploration package that we think will yield additional Texmods in the future. So, again, we really do believe Timmins is going to be a great big nickel district with multiple types of nickel deposits, just like you see in Western Australia. And so for us, with the results we're seeing at Texmod, picking up the rest of that property for again, not much money, was a no-brainer.
Yeah. Okay. Well, nice update, and maybe when you got a bit more on that, you come on and give us a bit more detail on one of those sort of company shows. The other conversation I was sort of conscious that I was hearing a lot of conversation about, and I know you were heavily involved with this, which is around this carbon capture storage. Quebec government, very, very serious, very, very generous with its funding for Quebec-based companies. Lots of other conversations going on elsewhere around the world about how people start to understand it, and maybe even how to play it from the investment perspective. But I was kind of intrigued by some of the companies were even talking that game in terms of what they're going to have to do to kind of step up to the plate. You've been bouncing around the world. Is a nascent space. I've said that to you a few times, but do you think there's a better understanding from companies, from industry, from funders, from governments now as now things have sort of it's been around for a few years, a couple of years?
Yeah, no, for sure. I mean, there's still a lot of moving pieces, but the fact that we're going to be a megaton per annum carbon storage facility with our project has opened up the doors to some pretty large companies who are interested in playing in this space. And the view that they see in Canada, we have a mandated carbon price that's going to go up by $15 a ton increments to $170 a ton in 2030. Their view is things will be still be relatively quiet for the next few years, but once that price hits that tipping point, that the carbon tax hits a point where it's more advantageous to capture that carbon and start storing it. It's just going to be one of those things that's going to go from 0 to 100 in a very few years, in a few years. And again, not quite sure exactly where that tipping point is, but it is going to get to that point before 2030. So these companies are keen to find places to store carbon. There's a lot more technologies out there, that are being implemented to be able to easily capture CO2 from various gas streams. So, it's becoming very real, and some pretty exciting things going on in that space.
Mark, as always, thanks very much for giving us the nickel update and market news. We'll see you next week.
Sounds good, sir.